Good morning. We will pay attention to debtors today. In the previous lesson, we discussed the credit sales to debtors that was recorded in the debtors journal. Then we can also have debtors sending goods back because they're not satisfied with the goods, or it's not the right color or the right size. Or even the debtors can ask for a discount because there was a mistake on the invoice, or we delivered the incorrect inventory. They're prepared to keep it if we give them a discount. If we promised a debtor trade discount and we forgot about it, so it was omitted. So any of these allowances that you give to debtors, except when they pay their account, then it's recorded in the cash receipts journal. But any other reason why you reduce the debt of a debtor will be recorded in the Debtors Allowances journal. The entity will issue a credit note for these debtors allowance transactions. At the end of the month, a statement of account is sent to the customers where all the entries of the sales and returns and payments is recorded so that they can see what is the outstanding amount at the end of the month so that they can pay their account, and if they return goods, the debtors owe less money, so they will decrease on the credit side. We open a Debtors Allowances journal. It looks exactly the same as the Debtors Journal, except instead of sales here, we have Debtors Allowances. Here again, we don't have the same figure in two columns, so it means to complete a double entry, we will have to do a debit and a credit for the Debtors Allowances, and for the cost of sales, we'll have to do a debit and a credit entry. When we record the entries in the Debtors Allowances journal, we show the credit note number, the date, the name of the people, and the amount that they owe, and the cost of sales on that amount. We add up our Debtors Allowances journal to see what is the total 116 and 115. Every day, the entries in the Debtors and Debtors Allowances journal will be recorded in the individual accounts of our debtors in the debtors ledger. So this is done on a daily basis. So the first entry, we will show that we sold to Nell in the previous exercise. Now there's a credit note, so we have to reduce his account with 100 Rand, the sales price of the goods, and we deduct this 100 Rand from the 800, and that means he now owes 700 Rand. The same with Brink. We did the entry in the previous lesson where we showed that we sold goods to him for 600 Rand. He returned goods, so we have to show the name of the source document and the number, and we credit his account to reduce his account, and now he will owe 540 Rand. The entries at the end of the month will be posted to the general ledger. So the totals that we calculated in our journals will go to the debtors ledger. In the debtors allowances column, there's a total 460 Rand. That means the debtors return goods, so we have to credit the debtors with 160, and we will debit debtors allowances with 160 Rand. So we complete the double entry debiting the debtors allowances. That will reduce sales because this will be posted to the sales account transferred at the end of the year, and we credit the debtors to show that they owe less money. Then the goods were returned, so it means that we have more inventory available, so we will debit our inventory account. We haven't sold these things now, so we have to reduce our cost of sales, because cost of sales is the cost price of goods already sold. So if goods are returned, it was not sold, and we have to reduce the expense of cost of sales on the credit side. What did we learn? invoices issued to debtors are used to record the entries in the debtors journal. So when we sell goods, we will issue an invoice, and it's very important to look at the issued because we give it to them, and we take the duplicate invoices and we record it in the debtors journal. When we issue credit notes to credit debtors, it's because they return goods or we want to give them allowance. These credit notes are used to record entries in the Debtors Allowances journal. So invoices issued, credit notes issued is in connection with debtors. Invoices received, credit notes received is in connection with creditors. The entries in the Debtors Journal and in the Debtors Allowances Journal are posted to the individual accounts of the debtors in the debtors ledger on a daily basis. So every day we can determine how much money is owed by each debtor. This is important to determine whether they are overdue or they exceeded their credit limit, whether we can give them more credit. So it's a very important transaction to determine how much money the debtors owe. The entries in the Debtors Journal and in the Debtors Allowances Journal is also posted to complete a double entry in the General Ledger. The Debtors Control Account is used to record the total sales and the total returns. So the individual entries for sales and returns is recorded in the Debtors Journal. The total at the end of the month will be recorded in the Debtors Control Account. The total of all the outstanding amounts in the Debtors Ledger at the end of the month must equal the balance in the Debtors Control Account. That is an indication that no mistakes were made.